me tell you about buyers, my friends. If you have a home to sell, if you're a first-time home buyer, great timing. Happy to talk to you. If you have your first house and you want to leverage that house to buy a better one, also great timing. Welcome. Welcome. Hey there, everyone. Jamie with Sell for 1%, and I am excited. It is 09/10/2025. Jerome Powell is doing his walk of shame. We're here to talk about it. Lots of fun ahead. Rich with Equitable Mortgage. And again, Jamie, Sell for 1%. All the guys here, as usual. Rich with Equitable Mortgage. What did you see, Rich? What are you seeing?
Well, this was a big morning. This morning at 8:30, the PPI number came out, Producer Price Index number, and it was a negative zero point 0.1, 0.1. It was a negative zero point 0.1. They thought it was going to be a positive zero point 0.3. But irregardless, it was down. Producer prices were down. That was perceived again as good news to inflation data. And of course, we had the unemployment numbers that were negative last week. And so, all in all this is good information and good news for interest rates. We are seeing the conventional loans down in the low sixes, 6.1, 6.2, 6.3 range, depending on your scenario. We're seeing FHA loans in the fives, and we're seeing 15 and 20-year fixed loans in the fives on the conventional side. So the time has come that we've been talking about for a long time. And the folks out there that have been sitting on the fence waiting for rates to go down, you got to jump on a house if you find one you like, because there's going to be a lot of frenzy, I believe, when these rates get into the fives, if they do. And it looks like that's going to happen. So you want to get it, if you want to avoid the bidding war, if you want to avoid the house being priced up because of multiple offers, now is the time to jump, I would say. That would be my advice to everyone out there.
See that? Did you see that? Great Cursoni. What is it?
The great, yeah,
Karnak.
the
The
great
flood's
Karnak.
coming. Here's your
Personi's
arc.
is a restaurant.
Well, meet you there for dinner sometime. Here's your arc. The
There you
flood's
go.
coming.
The
Go
thing
get a
that the thing that
Stromboli at the Great
if you want to
Carsoni's.
get into the weeds a little bit, the thing that economists are still trying to determine is tariffs. There's more cost in the price of things because of tariffs. I mean, there's no way to discount that. I mean, there's more cost in every goods that has to be imported. The question is, who's absorbing this cost? Is it the exporter? Is it the importer? Or is it the consumer? And the way it looks right now, it is either the exporter or the importer who's absorbing it with lower margins. And also the producer back in whatever country this is being produced in is trying to be more productive and cut costs out of the production of whatever product they're making. And it's not being passed on to the consumers. But the fear is that that may be incorrect and that it will eventually be passed on to consumers. So that's the one thing that's nagging at the back of heads of a lot of the economists out there.
Yeah, I think it's only natural that eventually it trickles down to the consumer. But the hope is that by bringing home a lot of these jobs, that people will be making more money here in United States and then can absorb the tariffs a little easier. But again, I go back to my gas cost. And, I'm seeing it kind of fluctuated last week or 2 weeks ago. It was up to like 3.39 a gallon. And then now here recently, I'm seeing it around 3.09 or thereabouts. And so it doesn't seem like it wants to get below 3, but I know that OPEC just said they're going to increase like 120 million barrels a day or something crazy. And I think, barring all the political stuff, that's really a shot at Russia to try to devalue oil and take on the Russians selling their oil around the world in this war that we got going on over there in Ukraine. But again, there's so many different moving parts on the backside. and we as consumers are the first ones to feel it. And I feel that was one of the reasons why Trump got elected, was because a lot of people were feeling the pinch of 3.50, $4 a gallon, milk going up, eggs going up, everything was up. And, I could, like I say, I just use my gas price litmus test. And right now I'm happy to see oil prices down.
Gas prices usually are a good indication of what interest rates are going. We've said that for a while now. So yeah, gas prices are down, interest rates are down.
So
I would like to make a
any
comment on that.
projection?
I would like to make a comment on that, please.
Go ahead.
Go ahead, Carsones.
OPEC. I walked through a lot of Westerville houses built in the 70s, and some other ones built in the 70s that have heat pumps that are original. And it's like, why are there so many heat pumps built in the 70s? And it's the OPEC oil crisis. It's funny to me. What I see driving around a lot is Teslas. I don't know if the gas is, I think it's still major. It's still logistics. It's still all most transportation. But I'm seeing the Teslas, and I think that might start to kind of drive a kind of manifold effect like we're talking about with gas prices, that we're not relying on fossil fuels as much moving forward. Does that make sense?
The question there is what's generating the electricity?
Well, there's a lot of coal, but it's not all coal. But I hear you. I understand.
Well,
Yeah,
it's a
mostly
fossil
coal.
fuel of some sort. It's going to be coal, natural gas, whatever it is. I mean,
Propane.
yeah, and that's the interesting question, is like, okay, well, yeah, I understand. I just plug in my car, but I heard yesterday that Ohio, there's a Ohio House of Representative, I don't remember his name, but he is proposing that if you are using too much electricity, that the utility companies will have the right to turn you off. So, just based on, somebody's, equation somewhere, if I'm burning too much electricity, then AEP is going to have the opportunity, and they now have these new, meter boxes
Kill switches,
that they can
right.
turn you on, turn you off in an instant, that they're going to be able to limit you.
3 years ago, I was in Clintonville and experienced the AEP shut off. No call, no email, nothing.
You
They
didn't
just
pay your
said-
bill.
No, it was the whole block. It was the whole block. Luckily, it was just my side of the street, too. I'm walking down the street, looking across the street like, what's going on here? AP eventually emails me, hey, solar flares. Too hot. Got to cut it off. It's like, oh, great. Thanks for the heads up. I didn't have anything else going on today.
I'm not sure what bougie neighborhood you're driving around in, seeing all these Teslas, but
East Como, Clintonville.
according to your favorite Chat GPT, electric vehicles and hybrids are 5% of all registered vehicles on the roads in America. So I don't think that electric vehicles.
Ask the Grok app. I don't trust GPT.
I don't think that electric vehicles are going to overtake the world and cause a gas crisis.
Fair.
Well, the
Fair
key
point.
is that, for the average person or below average person, that gasoline prices impact their daily lives. And with the gas prices come down, you feel like you have a few more dollars in your pocket, so on and so forth. And so it'll be interesting. Rich, I was going to ask you, do you have any sort of prediction as Karnak the Magnificent into the future? When Jerome makes his speech next week, will you see rates drop into the high fives?
Well, first of all, the probability of a rate cut next week is, according to the economists, 100%. So
Right.
the market, everybody knows they're going to cut rates. Now the debate is it a quarter or is it going to be a half? I think it's going to be a half. I believe they're going to cut a half. And I think the market kind of believes that too, which is why we've seen rates coming down. So as I said, the rates have come down in anticipation of that move by the Federal Reserve next week. So that doesn't necessarily mean that because they lower rates next week, we're going to continue to see rates go down. As I've pointed out many times on this channel, last year, exactly 1 year ago in September of 2024, they lowered rates a half a point, rates went up. Now, So it matters what they say coming out of the meeting more so than whether they lower rates next week. We know they're going to lower rates, but what are they going to say about future rate cuts? What are they going to telegraph? And I believe they are going to telegraph that they're going to continue to add stimulus to the economy, that they're concerned about the jobs, that inflation seems to be under control and all that. If they talk like that, then we will see rates continue down for mortgages because that forward thinking model is going to believe that rates will go down towards the end of 25 and into 26. So if you ask me to put on my Carnac hat, I do think we're going to see rates continue down and probably into the fives sometime in 2026.
So let me ask you this question. Do you have any recollection of the biggest Fed rate cut in history? I know we've had 0.5%, several times, but has there been anything bigger?
Yeah, when they and for COVID, when the March of 2020, around March 20th, when you know what hit the fan, I know it was a three-quarter cut. I believe they did a three-quarter% cut immediately, and then came back with another cut not too long after that, like a couple days later. So these were emergency rate cuts. They weren't scheduled, meetings by the Fed. They just came in an emergency cut rates. So I know we've done three quarters and followed that up with another cut back in the COVID days. And I don't remember anything like that any other time that in recent history anyway. But again, remember quantitative easing, remember buying mortgage-backed securities. They're not doing that right now. And that is what really drove rates down into the threes and the twos. So, to think we're going to do that again is probably unrealistic. But getting into the fives and maybe at some point in the next year or so into the high fours, I think that's not unrealistic to think that.
Yeah, I was just curious if too late, Jerry, that they might,
March
instead of a half
2020.
point, because of this 900,000 job revision that just came out, they may say, oh, we need to go bigger than 0.5%.
Yeah,
I got some cool ones here, fellas. Gronk is searching for those giant rate cuts, and there's a couple cool ones that I'm seeing, but it's still searching. Go ahead, Rich.
You're still searching?
This stupid thing, Gronk app is still thinking. I have to sit here and watch it think while it thinks. It's insane. It's on expert mode.
What I was going to say to kind of bring things home to people a little bit is I've got it on my screen right now, a $525,000 mortgage. So if you had a $525,000 mortgage and the rate was 6.75, your monthly payment on that, and let me make sure I have my facts right. Yeah, your monthly payment would be $3,405 at 6.75. Now, if that rate goes down to 5.75, your payment would go down to $3,064. So about a $350 or $400 decrease in your payment. Is just you're living in the same house. There's nothing different. All you're doing is saving $300 or $400 a month on your payment. And that is the real world savings to somebody if rates drop 1 point like that on a $500,000 mortgage, which a lot of people have out there. So it's real numbers. And the other thing about if you refinance, this is important to people understand. Maybe it costs you $2,000 with us to refinance. Now, if you go to some lenders, it can cost you 10 or 20,000, but with us, it's going to be around $2,000, and you're going to save that money every month. So if I said to you, Jamie, give me $2,000 right now today, and for the next 30 years, I'm going to send you a check for $300 to $400, whatever that savings you're making on that mortgage is. Every month you're going to get $300 or $400, again, whatever that number is, in your checkbook, tax free. If the stock market goes to a zillion or if the stock market goes to zero, you're still going to get that money, save that money in your account. It's the best investment in the world to refinance your loan whenever you can save money like that. There isn't a better deal in the world.
Very smart. Now let's transition from smart. It's a lottery ticket.
Okay, I don't have my envelope. Okay.
Great.
Oh,
Okay.
is that for the billion?
That's for the rate cuts, and my prediction is going to be a basis point. The biggest federal fund rate hike in U.S. history, 100 points, October 6, 1979. Went from 11 to
Okay, that was before
12%.
my
It went
time.
up. That wasn't a cut. That was a
I'm
rate.
telling, I said it. I did say that. I know.
Yeah.
What was it
But
in
it went up
COVID?
from
Do you
11 to
remember?
12. And then the biggest rate cuts in history, 100 basis points, December 16th, 2008. From 1% to a range of 0 to 0.25 amid the financial crisis. And on March 15th, 2020, from 1 to 1.5% to 0 to 0.25 in response to COVID, another 100 basis point cut.
I knew it was a big cut for COVID. I wasn't sure what. Okay, so it was 100 basis points. I knew it was huge, and that's when rates just like fell off the cliff. They overnight, and
Right.
They were already low.
Right.
they
It
were
was like
already in the high threes, and they went to the twos overnight, and it was nuts.
Gronk,
There was a lot of
Gronk
mistakes
it
made
smell,
during
yeah.
that time,
Yeah. Yeah, no
banking
doubt
and
about it.
otherwise. I
But
mean, there were
there's
a
a
lot of
big
mistakes
mistakes
made.
going on right now that, they were depending on this, data that apparently was not correct. And so when you have almost 1 million jobs just disappear because they corrected, what they thought, again, we feel it out here on the streets, and the guys there in Washington don't feel it because they're in their bubble. But if you got 1 million job, loss revision, is that enough to get Uncle Jerry to say, yeah, definitely half point, or it could be bigger, could be 3/4? Because we're behind
If
the
you
eight
ask
ball.
me, it's got to be a half. I wouldn't say it's out of the question. It's 3/4 or one, but I think it's going to be a half, and then they're going to say things that telegraph further rate cuts in November and December.
You wouldn't be
Yep, and
surprised if it
that
was
will
higher.
then have them slide down, right?
I wouldn't be surprised if it was more than a half, but my guess is a half if you ask me to
Yeah. All
do
right.
my Karnak imitation. But
That's 50 basis points.
far
I
from me
mean,
to argue with Chat GPT, that's for sure.
Oh, it was
We
Grok.
all know that machines are
Important.
smarter than people.
no, those things
Important.
are so off base on all this stuff.
Jada Bomb, what do you see on the listing side? I don't know if you have time, and maybe Jamie can talk buyers first, to take a quick look at the showing time showings that are happening right now. I just
If
looked
you
at
are worried
I
about
just looked
buying
at our
because
hold
Go
on a
ahead,
second,
sorry.
Jamie. I just looked at our showing time, and for all of the listings that we have for today, we have one scheduled showing.
That's not correct. I have several, I think.
I have one today, one tomorrow, and two beyond, is what showing time on my dashboard is saying.
I had like 10 or 12 yesterday. So
I'm talking about.
We're at an impasse here at Sell for 1%. Maybe we should
I
move
would
on to
just
buyers.
just talk a little bit about buyers. What do you see, Jamie? What do you
Let me
see?
tell you about buyers, my friends. If you have a home to sell, if you're a first-time home buyer, great timing. Happy to talk to you. If you have your first house and you want to leverage that house to buy a better one, also great timing. Welcome. Welcome. I'm seeing a lot of contingent home sale offers coming in on my listings
you're
for my
talking about
buyers.
buyers. Talking about buyers.
I am talking about buyers. Thank you for reminding me. I'm
You're
seeing
welcome.
a lot of contingent home sale offers with my buyers. They have a home to sell to step up to their next home. It's a great time for that. The next part, if you're a first-time home buyer, it's a great time for that as well. It is a good time for buyers.
This is
I think
deal.
so.
Buy.
All right.
All right.
Jason, what
That's
do
the
you
buy
see there?
side. You guys got the sell side?
When I get home sale contingent offers like Jamie's talking about, I tell my sellers politely decline. Homes are taking far too long to sell right now. On average in the Columbus metro, we're around 70 days for going into contract. And for everyone that sells in, I just sold one last weekend in one day. So for everyone that sells in one day, that means there's one taking 140 days. And that's how you get to this 70-day average. I politely reject those offers. 2 years ago, I took home sale contingent offers all day long. The last couple I've done, I've had my seller sit off the market for 14 days, 21 days, just wasting time. And so, this very politely would tell you get your house in contract and come back and talk to us. I think buyers have a ton of leverage in the market, but sellers need to be very smart right now and not waste time. If the right buyer's out there, you cannot miss them because you're off the market. And so in the Columbus metro area, 73 days on average. If you throw out the highs and the lows, the median is 42 days. So we're over a month for most sellers. And I think that becomes very important for people to realize, because you don't need to just slash price in the first day or two, you don't get a buyer. Most of the sellers I talk to, they realize this, they're looking, but some still think it's 2018, it's 2020, and that homes in my neighborhood sell in 2 days. And they all say that until I pull up the market analysis and I do it with them, and they can see, no, you know what? I've got, one good example, I guess, would be I got a offer on a condo in Powell, and they have a house in Powell. They've owned it since 1996, paid 200,000 for the house. It's worth 650 today. And they, give me the old, oh, it will sell quick. I pull up their neighborhood and there's 3 houses for sale at 55 days, and they're all on the market still. And so, that was unheard of for a Powell house, a couple months ago. 50% of the listings in the metro are decreasing in price. It's a different market than what it was. It's going to take a little bit of skill and a little bit of tact. And the biggest reason why that is in Columbus today, we are over 5,500 homes for sale. Again, back in 2020, 2018, whatever year you want to use, like the big boom years, we were down around 1,900 listings, 1,500. I mean, there was a time when we would meet on these calls and we would seriously ask, are we going to get below 1,000 listings? We're up to 5,500. That's more homes for sale than any time since 2016 in Columbus. So buyers have more to choose from. You need to be priced right or have something special to offer. It's a very interesting market because I had one that sold in one day. I put one on in Pickerington yesterday. We had 3 showings within an hour of listing it. But for most of my listings, that is not the case. And it's taking a little bit of skill, a little bit of finessing, and all my marketing chops and prowess that I have acquired over 20 years of experience. And that's why you pay me the big bucks of 1% to sell the house. So it's a very interesting market. I don't know if you're seeing the same thing, Dad. Sellers are still getting record prices. Here's all the negatives. Here's the bad stuff. But the positive for a seller is most of these sellers are getting, record high prices. And so really not a bad time to be a seller. Still a seller's market, but becoming much more balanced.
Yeah, I think that that's becoming more balanced. We see that. Did you have a chance to pull up the showing time data?
For the whole state of Ohio, yeah, I have it. I don't know if I can share my screen or not. Is that an option on here?
Should be able to now.
Is this right here? I'll pull this up in a listing appointment and show people. And so the orange line is 2025. And we've actually had more showing activity this year than we have in years past. Again, the difference is there's more homes for sale. So this activity is spread across, double the amount of listings. So you may not feel that you're getting more showings on your house, but the market overall, there are more showings right now than what we've had the last couple years. These dips, and again, I explain this to people as I'm meeting with them. This is Easter, where my mouse is going over. Here we get into, what is this? Memorial Day. Memorial Day. And then July 4th, big dip. Then it surges back up. And then we get into school starting, Labor Day. And then right here, now this is September 7th. In real time, it's September 10th. If you look down at this chart, the market's going to continue to surge. And that little U shape at Labor Day it every year it ends up higher than where it started. So we're going to have more showings here very shortly than what we had before the Labor Day slowdown. And that's, Dad is always, I tell my sellers when I meet them, me and Dad have always joked, this is the weekend for realtors to take vacations. It's a very slow weekend at the end of August. People are going back into school. You got holiday coming up or wrapping up vacations. Your focus is not on buying a house. Now you're going to have this little dip, and then it's going to come surging back. And September is going to be typically as strong as July. When you look at this, and it's going to be better than August. Now you combine that with rates are coming down right now, and we're at an 11-month low on interest rates. This is a really good window to sell your property before we get into the holiday season, because you can see here where the dip is. Down here, this is going to be Thanksgiving, then it's going to drop down to Christmas time, and then the beginning of the year we're off to the races. I mean, another question I get from sellers is, well, when's the best time to sell? April and May. April and May are always the best months to sell, and that's, you can look and see the showing activity. That's when it's the hottest. And so homes sell year round. I sold more in December this year than I have any other year in my career. And again, you're selling for record prices, so don't wait. If the perfect buyer's out there, get it in front of them. But, don't worry about timing right now. I mean, your goal should be get it on the market ASAP, because rates are coming down, and this is our surge. September and October before the holiday season, this is your next best window until we roll around the next year. And who knows what next year holds. Get it on the market. Don't play games. Get it out there.
Go ahead, Jim.
Thank you for calling on me. I'll lower my hand now. I agree with everything that was just said. I guess I'm more looking to the future in terms of, I think I'm going to have to keep jamming these contingent offers down Jason's throat. And I say that because homes aren't selling that quick right now. But come this month, if rates come down and we watch the market take off, I will be telling my buyers that have a house to sell to list it. But right now, I don't think I can advise them, put your house on the market. We might be on the market for 55 days. Then we get a buyer. Then we'll find your house. For my buyers, I would say find the house you want first. Because if you find a buyer for your house, you got to find a house now. Now the pressure's on. And for my buyers, I don't want to apply that pressure. I want them to feel in control. So that would be, it might be wrong, but that's my indifference as a buyer agent watching the market.
And remember that Equitable Mortgage has bridge loans for those who can qualify. It is difficult to qualify, but a bridge loan is a loan against the equity of your house to use for a down payment so that you can make a non-contingent offer and then sell your house later.
Yep, and that's what we
Rich,
politely
thank you.
tell people is, very politely, if you're so confident your home's going to sell, go get a bridge loan. If it's going to sell in a week, go get a bridge loan. Why are you going to make me take it off the market for a month? I think that
It makes sense.
I've been
Yeah.
out with buyers too, and you make an offer on one that they really love, and then the seller says, no, thank you, we're not going to take it. Your house not even on the market yet. And what's worse than that, I just got an offer today on one. Their house been on the market for 45 days. That's even worse, because now I'm looking at it going, well, that home's never going to sell. I think that you're better off to list your home, get it under contract, contingent on you finding suitable housing. And now you're going, because like when are you trying to say something, Dad? You're muted.
Nope, I am.
Continue with the Borophil, Jay.
Am I?
I hear you now.
There you go.
Okay. Sorry about that. I would just say I think the truth is somewhere in between what you and Jamie are talking about. And it just, for me, it's just very quickly, if someone sends me a contingent home offer and they're $100,000 under what the neighborhood value is, I think I'm probably going to, give my sellers advice to go ahead and think about taking it, because their house is going to sell very quickly. If their house is $100,000 over the neighborhood price because they have gold fixtures and the world's greatest, this, that, and everything else, then my advice to my client's going to be, I don't think that house is going to sell for a while. and probably not a good idea to get tied into it. So I think it's somewhere in between what both of you are saying. You know, from a buyer agent, yeah, you want to do the home sale contingency. From a seller side, you'd like just a clean deal. But if you can get a home sale contingency where it looks like the house is going to sell in a reasonable amount of time, then it may not be too bad a deal. So, anywho, that's from the old guy in the room. Actually, Rich is the old guy in the room. I think you're what?
I'm the old
Whoa,
guy.
whoa, whoa,
You're
whoa.
you're a year older than me.
At least.
So, all right, Jay Marinsky, take us on home, man.
I appreciate everybody who's joined us here in this span of time to hear us bloviate on how epic the Columbus market's about to get. I hope you're all ready. Rich Sircone's information's on the screen to get ready. We will be doing webinars if you guys want to be more prepared for the storm. And we're here to help. So thank you guys for the conversation, the dialogue. I think onwards and upwards, right? Thank you guys.
Downwards when it comes to rates.
Yeah.
Onwards and downwards.
Real
I'm
quick,
hopelessly
real
upward.
quick. Jamie, you said 1% down. Rich, you're saying 0.5%. Jay, what do you say?
For the Fed, the prime rate,
Yeah.
it'll be, I say 50 basis points, and then it won't change interest rates unless he comes out saying it'll be future rate cuts. If he comes out with his whole, we're going to be data dependent and blah, 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 then it may not
Boy, he
drop
didn't ask you
the
to
interest
qualify.
rates
He
at
just
all.
asked for an idea. He
The
said
prime
half
rate, 50 basis points.
yeah.
Okay, so we got three halves. We
And
got
I
three
think I'm
halves and a whole.
What number will it be?
Yeah, I'm going to half as well. So, all right.
I'll win. 1 point. Thank you guys. See you when we drop a point.
That'll be huge.
Yeah, thank you for watching. Leave a comment if you have questions. Like, subscribe, ring the notification bell. If you have a home sale contingent offer, call Jamie. Otherwise, give me a call. And then you want to complain about me, call Dave. Need a loan, give Rich a shout. Thanks for watching, guys. Take it easy.